Dear students, welcome again. I am Dr. Vishal Kumar Lahiri, an assistant professor at Institute of Management Studies, Banaras Hindu University. We are discussing a course titled Principles of Management. And this course, so far, we have thoroughly understand from part 1 to part 10. In this session, we will be trying to get the detailed fundamentals about the controlling techniques in the part 11. And the part 11 consists of module 51 to 55. In this module 51, we will be discussing a detailed concept about the different technique used in the controlling process. As you can see in this slide, we will be focusing on our understanding towards what are the different techniques or methods of the controlling, starting with the budgetary control, the types of the budget, as well as the benefit of the budgetary control. So these are the overview of your module 51. So let us try to relate the thing that we have discussed it so far. In the very earlier session, we have talked about the very basic about the management concept. Okay, then we have tried to understand the roots of the management, like from where it started. We have got to know about the evolution of the management concept, and we have seen the 3 evolution eras. Then we started understanding about the various management functions, starting with the planning, organizing, your recruitment, staffing, leadership, directing, and controlling. This particular part is an extension of your part 10, that is the controlling. And in the last part, we have a clear understanding about what is controlling, what are the different steps required under the controlling, what are the different types of the controlling, benefits, limitation. We have established the relationship between the planning and the controlling as a function. And lastly, what are the different principles which are very essential for the effective controlling measures. We have also highlighted our session towards understanding the behavioral aspects of the controlling. Like many employees within the organization, they do not like to be controlled. And we cited some of the reasons for that as well. Now the point is how it is important for a manager to make sure that these controlling measures or these controlling activity as a function of the management effectively how it can be implied. So this particular part is like understanding the different techniques or the different methods which has been evolved over a period of time in better implementation of your controlling processes. And in this particular module, we will be discussing one of the method of the controlling is your budgetary control or the budget as a part of your method. Right. So let us try to understand what is a budget. Like try to understand in a very layman language. Whenever we make an estimation of the total cost, okay, we call it as a budget. Like in our day-to-day life, we try to like make a clarity on what are the different source of the revenue we have and what are the total expenditure we have. Alright, so based on the source of the revenue or the total income an individual is having, he or she try to allocate the total expenditure into the different heads. That particular part is the budget. Okay, it is the simplest or the concept about the budget. Now let us try to understand what budget is as per the standard definition of Institute of Cost and Management Accountant, England. A budget is a financial or a quantitative statement prepared and approved prior to a definite period of time, a policy to be pursued during the period of for the purpose of attaining a given objective. Okay, so budget is a financial statement. Very first thing that we understood, it is a financial statement. All right. Second, it is a quantitative statement. Quantitatively, it can be prepared. Like there is certain methods which are important for the preparation of the budget. Okay, and it has certain time period. So you will be preparing the budget for certain time period. It may be like for the 3 months, for the 1 month and all. Okay, and it has certain objective as well. Now the objective of the budget can be different. When we'll be discussing about the types of the budget, we'll be like understanding the different types of the budget, the sales budget, the production budget, the master budget. So this will bring clarity about what budget is. So a budget, we can like summarize our definition. A budget is a financial statement for a particular period of the total expenditure or the income that will be helpful in like attaining our specific objectives. All right. So it is the most popular traditional technique of the controlling. There are two methods for the controlling. Okay, one is the traditional method, another is your modern methods. So right now we are discussing about the traditional method of the controlling. All right. So we'll be highlighting our session on the both the methods as well in the upcoming session. So before that, one important aspect about the budget is like for a company, they can prepare the different types of the budgets based on the requirements. Okay, like if the operation is like very wide, the company is dealing into the different production processes, research and development. All right, it may be towards like the marketing department, it may be towards some of your purchase of heavy equipments or the machinery. So all these things require a proper estimation of the cost. Okay, so all the departments within budget, what happen in an organization, like we have the different departments. It could be your production, it could be your marketing, it could be your IT. All right. So all the departments are given the responsibility to prepare the different budgets. Departmental budget it is called. Now what will be the base for the preparation of the budget for each of the department? It will be dependent upon the future course of the activities that they will be doing. So one of the element of the budget is that it is done or it is an estimation for the future activities, and based on that you have to prepare your budget. So let us try to understand what are the different types of the budget we have. Very first one, as you can see, is the sales budget. Now the sales budget will be prepared based on certain factors. Factors could be your past sales, your order in hand, sales estimation, competition. Other factors could also leading an important role for the sales budget. Now what is sales budget? A department in the marketing, okay, it is their responsibility to sell the number of the products, required number of the products. So suppose the company has made an standard that at least 10 lakh of the unit to be sold. Now this is the standard one, this is the objective one. Okay. Now the marketing department will be trying to achieve this objective of 10 lakh unit to be sold. Now it will be within a year, like for the 2025, it is the like your objective. Now the marketing department or the sales department will be like planning the activities. What are the different resources that they require to achieve this 10,000 mark of the unit. Okay, for that they need some fund, they need some capital. Okay, so they will be preparing the budget and submitting it towards the higher level, that these are our requirements. Now these requirements will be based on some factors like the past sales and the trend. For the last quarters or for the last year or for the last 5 years, what the sales has been achieved. Suppose it is for the last year we have achieved 8 lakh unit of the sales total. So we are jumping 20%. So we need to have additional fund of 20% in our budget. Okay, it could be order in hands as well. Like how many orders you have received? Out of the 10 lakh, you have received 3 lakh orders currently. For the 7 lakhs, you need to like expedite your promotional programs. Okay, sales estimation, it could be based on the market factor. Competition, if the competitors are dominating, then you need to like remodule your product in terms of like some specification, in terms of with some promotional, in terms of, for example, some kind of cashback or discounts. So all these will come under the sales budget. Second is the production budget. Now the production budget is based on like how many units the department will be manufacturing. So production budget will be prepared by the production manager. All right, and different factors are very much essential, like the seasonal fluctuation, product mix, make or buy. These factors will be very much relevant when they will be deciding how many units to be produced. Okay, third one is your material budget. Material is with respect to the raw material which are required to manufacture the unit of the product. So you will see there is a close relationship between all the different types of the budget. Okay, if suppose material is not in hand or the supplier is not able to provide you the material at the right time, then how you will be making the product? If you are not able to make the product, then how you will be like selling the product? So there is a interrelationship between all the different budget heads or the types of the budget. So material budget will be dependent upon the storage, working capital and inventory control. Okay, suppose your storage capacity is not so big, or your warehouse or the cold storage is very small. So your material budget will not be so much high, because you do not have the space to store the different material. If the material is of perishable nature, it means like you need a proper ventilation, cold storage to keep the material, or else the material will be deteriorated. All right, working capital, if the working capital is too much, in that case the requirement for the working capital is too much, you need to have higher materials. Okay, next is the labor budget, like what type of the employee you require. If you are going to manufacture a very tech savvy product, in that situation your labor budget will be higher, because you need to pay higher amount of wages to the technical staffs. All right, so cost of training, wages or the salaries, number and types of the employee, these factors will determine the overall labor budget. Okay, labor budget, simply speaking, is the like estimation of how much you are going to pay towards your staff for this particular period of time. Cash budget. Cash budget is with respect to the cash receipt and the payment. How much inflow of the cash is there? All right, and how much outflow of the cash will be there. Okay, it means for a particular period how much revenue you will be generating. It is also an estimation, and how much like expenditure you will be doing. Like coming back to our very first example, 10 lakhs of the unit to be sold. It means if suppose the unit is of rupees 10, all right, so overall cash inflows will be your 1 crore. Again, what will be the total expenditure? If the total expenditure is suppose 70 lakhs, 30 lakhs is the total profit. Cash budget is with respect to how much cash or how much liquid money or the capital which will be required for a particular project in a time frame. All right, capital expenditure budget, like you are coming up with very high tech savvy product, high tech end product. Okay, now the thing is you need to have advanced technology for that. Okay, so you will be requiring machinery, new tech, your rooms. Okay, some of the land you will be purchasing, equipments. So all these things you will see are very costly products. Okay, like the machinery could be 30 to 40 lakhs. Okay, you will be setting up new tech park that will be costing nearby crores. Land you will be purchasing. You will be purchasing certain equipments for the setup of the your warehouses or your production unit. So ultimately these type of expenses are termed as capital expenditure. Capital expenditure is a type of the expenditure which is non-repetitive. You will not be purchasing land or machinery on a year basis. Okay, so capital expenditure is like the budget for the capital expenditure is also determined. Overhead budget. Overhead budget is with respect to the total expenses. Now the total expenses can be categorized under the factory overhead, administrative overheads, and your selling and distribution overheads. Now what are these types of the overhead? Factory overhead means when the product will be or the raw material will be reaching towards the factory. For the purpose of what? For the purpose of conversion into your semi-finished or the finished products. So whatever the cost that will be incurred in the factory premises, it is your overhead, factory overhead. Administrative overhead is with respect to like whosoever are employed to manufacture the unit of the product. Like it could be your salary, it could be like any kind of training that you are providing to the staff. Okay, it could be some of the office expenses as well. Okay, so all these like stationery, printing, labeling, all these expenses will be under your administrative overhead. Now selling and distribution overhead. You are not manufacturing the product for the sake of the company or to your own employees. The ultimate objective is to sell the product. Now selling requires certain expenses. What kind of expenses? That you need to hire certain sales personnel or the salesman who will be like reaching out towards the ultimate customer to sell the product. So whatever the amount of salary that you will be paying or the any kind of wages you will be paying to those sales personnel, it will be termed as like selling and distribution expenses. Your cost of promotion, your cost of any kind of celebrity endorsement, all these will come under the S&D overheads. Master budget. Master budget is prepared by the budget officer. Alright. Now whatever the budgets like sales budget, production budget, your overheads budget, your any kind of capital expenditure budget, labor budget, cash budget. Now all the budget will be integrated. It will be compiled by the budget officer and it will be submitted to the top management. Okay, so when the total budget are compiled together, okay, to get a meaningful picture for the purpose of decision making, it is termed as the master budget. Alright, through like looking into the master budget, like a manager or a accountant will be able to get the understanding that what should be the total allocation of the fund towards the different heads. Alright, now last one is your fixed and the flexible budget. Now fixed budget is a type of the budget where like all the content or the allocation of the your fund will be fixed over a period of time, and flexible budget will be like it has certain like flexibility in terms of changing the different allocation of the fund. Let us understand with an example. Suppose the raw material budget. Okay, it could be fixed, it could be flexible as well. Now fixed in terms that you are very much sure that you require 10,000 tons of the raw material for the particular conversion of towards a particular product. Okay, no external factor will be influencing this decision. Then it will be your fixed budget. Flexible budget, that you have made an estimation of 10,000 tons, all right, but because of like sudden increase in the demand for your product, okay, suddenly your product got very popular, then you need additional raw material. Then if we have the flexibility of like changing the variability of the raw material, in our case it could be with respect to any other budget as well, then it will be termed as the flexible budget. Suppose additional you required 3,000 more tons, then instead of 10,000 you are now ordering 13,000 of the total material. So with this we have thoroughly understood about the different types of the budget. Now what is budgetary control? Now the point is why we are understanding the concept about the budget under the controlling process, because of the budgetary control. Now imagine every department has set limit of the funds, okay, financially we are talking about, then they will be very much oriented towards that this is the standard that we have to achieve. Within the fixed proportion of the fund, we have to complete the task. So this is somehow you are like controlling the activity of the different departments. If budgets are not prepared, then there will be no like direction of employee that they where they have to work for. Okay, like understand it, like there could be two situations: budget, no budget. The control. If you try to influence or control the behavior of the different departments, then you need to prepare the budget. What will be the result? Like it could be you are achieving the standards. Okay, if no budget is prepared, all the department will be directionless, and ultimately cost will be geared up. That's why it is important to have the budgetary control. Now, according to Terry, budgetary control is the process of finding out what is being done and comparing actual results. Okay, so what the things has been done so far, and result will be compared with the corresponding budget data to approve accomplishment or to remedy the differences by either adjusting the budget estimate or correcting the cause of the differences. Again, there will be a standard. Okay, like suppose the sales team has been given 1 lakh rupees, 1 lakh for promotion. This is an estimation, but in actually they have spent 1,20,000. Now this is the deviation of 20,000. 20,000 has been exceeded. Now the budgetary control is with respect to like approving whether 20,000 is feasible or not with respect to the promotion. It could be like the market has changed and you require additional amount for the promotion. That is okay. But at the same time, it will be reviewed. Requirement for 20,000 must be justified. This is budgetary control. Okay. So once again, budgetary control is like setting up the standards, measuring the actual performances, comparing it, and taking the decisions. That we have understood about the controlling process, and the same thing under the controlling or the budgetary control. So the main feature is objective is to help management in operating the businesses. It is the very first objective. Second is to provide control over the use of the resources. Now the proper fund will be in this case. If the budget was not prepared, then even 1,20,000 would have been like shortage of the money for the promotion campaign. Third one is to attain the maximum efficiency in the operation. So for this purpose, it is also important that the proper budgetary control can be done. And the last slides talks about the benefits of the budgetary control. Now I am hopeful that you students are very much clear about what is budget, what are the different types of the budget, and what is budgetary control. Okay. Now relevance of the budgetary control is very important. Until unless you are getting some kind of benefits, there is no meaning of budgetary control. Not very first one is sound planning. If you have a proper budgetary control mechanism, okay, then your direction for the achieving the objective will be very much clear, because you have a very transparent and very well developed planning process. Like at the very first stage, okay, like the sales department has been asked what is the requirement for the promotion or the cost of the promotion to achieve 10 lakh of the total sales. So they mentioned based on their evaluation, like we need 1 lakh rupees for the promotional campaign. So you see that sound planning is there because of the budgetary control. Coordination of effort will be there because all the departments we have discussed, the integration approach is there. If one department is not able to meet the standards, there will be effect on other department. Okay, like take one example. If the raw material is purchased, okay, and there could be shortage of the raw material, then ultimately the production budget will be hampered, your sales budget will be hampered. So every budget are interrelated and it requires an effective coordination. Communication, like the budget officers or the different element of the budget, like the employees who are engaged in the budget, they will be communicating the things. Like sales department will be highlighting that we are getting the sales calls for this number of the unit of the product. Then based on that, the production department will be preparing the product. So it requires high level of the communication. Control mechanism, ultimately the objective of the controlling or the budgetary control is to check whether they are performing their activities within the set direction or not. Employees motivation, like the employees are getting the direction to work, and ultimately their efficiency is increasing. So ultimately their motivation level will be higher. And democratic management, like you share the responsibility, you share the authority without the loss of the any kind of power. Okay, like the top management, they will be sharing. If there is no delegation of the authority, then all the activity will not be performed. Like master budget will be prepared by, for example, a person who will be assigned the responsibility to compile all the budget together. For that, the budget officer will require certain authority. Okay, so in this way we can say that it is a democratic management. So in this particular module, we have thoroughly understand about what is budget, what is budgetary control, the different types of the budgets, and the benefit of the budgetary control. With this, I am sharing with you suggested readings, some of the list of the books that can be helpful for understanding the concept about the budgetary control. That's all for the session. Thank you so much.